So China's economy is 12 trillion plus, just to give the differential. It is slowing, but I don't know how much is organic slowing versus forced slowing in terms of deleveraging. And it's not really deleveraging. It's trying to slow credit growth. But on the other hand, they're now trying to accelerate credit growth to try to stem the slowing. So trying to figure out what's really going on in China is very difficult. I still think growth is okay. I don't think it's dramatically faltering. But they also share another characteristic, China and Turkey, and that's too much debt, particularly on the corporate level. And a lot of it's dollar denominated. So they're making them even more sensitive to weakness in their currency.
Mm-hmm. Yeah, the Chinese government famous for putting the foot on the pedal, lifting it off again, and they're always trying to micromanage the level of credit. Bricklin, what do you think here? How worried are you?
Well, clearly the Chinese authorities have a lot of willingness to participate in markets. They want to affect growth in their economy. They want to rebalance their economy and get it to a point where it's on a bit more sustainable path. It knows about these leverage issues. It's been trying to deal with corruption issues for a number of years, and it certainly made some progress on that front. But the problem is, you know, the Trump factor came in. Trump came in and started throwing fuel on the fire, started, throwing rocks at places like Turkey and making things quite worse. And I think it really emphasizes how vulnerable an export-based economy like China really is to disruptions in U.S. trade relations and global trade orders. So I think it's really brought a new perspective in terms of the outlook for China and the willingness and the ability for the Chinese authorities to pick up that slack.
Picking up on that point in terms of how intertwined China is with the U.S., it's also intertwined with the emerging markets. So we're taking a look at whether or not there's a slowdown in China, but could that even glimmer of a slowdown be exacerbated by what's going on in emerging markets and a slowdown in demand from those markets for Chinese goods? Absolutely.
And to switch it around, China has huge demand for commodities. Well, who produces a lot of those commodities? A lot of the emerging markets. So they're all in the same bed, so to speak, together in terms of economic growth. So if China sneezes, you know everything around it is going to catch a cold, particularly in the emerging markets that are more vulnerable. Obviously, Europe and the U.S. have a more diversified economy, but we're going to be affected by that as well. We do business not just with China, but everyone who also does business with China.
Right. Yeah, Peter, how do you think this affects their strategy in dealing with the tariff issue with the United States right now, if at all?
It's a huge squeeze on them. I mean, because they're now getting pushed against the wall, and on one hand, they don't want to give in. But on the other hand, they don't want to sacrifice their economy. They don't want to see further weakness in the yuan, but on the other hand, seeing some more weakness in the yuan can actually help their export side. So they're in a really tough situation.
This doesn't help their debt.